Okay. Okay. What do I see as we speak? We're trading inside the range from see, oh, the highest high October this day. Yeah, 31st, 30 October 2025. This high, the candle that makes that high, and the low on the 21st November 2025. Okay. So the range, the highest high and the lowest low is the dealing range. So Monday we opened trade lower, take the trade below previous month low. Okay. So just to highlight okay, first let me remove previous the premium 50 lookup high and the premium 50 lookup low. I'm gonna remove the significance of this. Okay. Okay. And then I'm going to leave this. Okay. Let me go to the weekly chart. Chart. Okay. From the weekly chart, what do I see? We're on a new week and Asia session. Okay, this is Asia session of Tuesday on a new week. Okay, we opened a new week and traded below previous week low, and we traded below two previous week low, and one of the previous week low was my long-term target for February low, and then the chart. Oh, okay. First. Okay, the weekly, the week. Okay, I'm marking the 70, the 50%, the first quarter, and the third quarter. Okay. Okay. So from the weekly chart, based on what based on how the market looks, the draw on liquidity will be the previous week high. So my assumption will be that we traded below previous week low, and we are attempting to trade to previous week high. So this will be my next target for from weekly perspective. Okay, let me just put this target drawn liquidity. Okay, then I go to a daily chart. And from the daily chart, okay, on a daily chart, I have a dealing range. The dealing range is the high of October and the low of November, previous month, previous year. Okay. Same thing. On the opening of the week, our target was this. So we opened Monday. We used this as a purge and revert. We traded below this. And now The next target is this high. This high is the next first round liquidity. What we do when we get here and how we trade above here will make this the next high after trading above this high. Okay. Right now, as we speak now, looking at the past 10 days, we have this candle, day one. This candle, these both candles, that they cut this, this candle is covering the whole range of this candle, and this candle is covering the whole range of this candle. This candle is covering the range of this candle. This candle is covering the whole range of this candle, and so on and so on. So we are basically in a consolidation because each and every candle that forms recovers all the range that it has formed previously. For example, here we are looking at low prices from this week. Let me say, okay, Monday. 1, 2, 3, 4, 5. So from this day, I was looking to trade here. So this whole week it opens, but it never trades here. It consolidates, but it fails to trade above the previous week and go down. And when you open on Monday, you see a purge and revert of the market where it just trades below liquidity, takes out liquidity, and then reverts higher. And here we are at discount, there we are at premium. So you just need to be patient. Okay. Now, so for now, as we speak, let's see. Okay. We want to see, we are at discount. So what I will be monitoring right now, it is this price, this level. I'll be monitoring this level. Also the whole week. And we have this green line. This green line is the 25% of the dealing range. So we see the market is failing to close below the 25% of our dealing range. So that's another confluence that making me think that it can trade above this high. Yes, the 50%, we're still below 50%. So here I don't see anything. The only thing that I'm looking at with this candle for me right now at 6 o'clock, the object that I'm focused on, it's this high and how it trades when it gets here. Can this be used as a rejection block? Here, I'll remove this. I think its significance is not there anymore. Also, this liquidity has been taken out here, so I'll remove this. It has been used now. I'll put this is an inefficiency. This wick is an inefficiency. If this market is going to be bullish, we'll anticipate that it doesn't even reach this level. Basically, this will be like the rejection block. Discount rejection block. This is discount rejection block. We don't want to see the market get to the discount rejection block. Otherwise, We're gonna continue lower. Okay, okay, now this is a new day. New day. So as long as we are below 50%, we'll be continuing. Oh, let me look at professional market. NQ. Let's see what's happening in NQ first. Then we'll. Oops. Okay. All right. So NQ. Okay. Basically, this we traded below November low, and we were unable to close. Okay. We are unable to close, and now we are here above here. So this is the new target. Okay. 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 Edge and revert. Okay. Let's see. Let's see. This is the new drawn liquidity for me. Then if it gets here, if it can, then it can get here. Then yes. Yes. Okay, ES. Mhm. Damn. What is this? It's failing. It's giving SMT, but at the lows. Okay. Because it did not trade below here. Mm-mm. This is SMT. This low 6,584.50. This low making relative colors. 200, okay. 3, 4. Okay, this one is below 10. Okay. Okay. Now, my assumption. Looking at ES now. If ES trades above this blue 50 gap, or let's say it use this blue 50 gap to trade above this high. As long as ES is below this blue 50 gap, I'm bearish. And these are relative. This is my drawn liquidity. Yes. Okay. So I do not see this as a essence. Okay. I'm willing to be wrong and not see this as an SMT. I see ES has made a higher low than NQ, but my drawn liquidity is still here for ES. As long as ES is below this movable gap, my target is here. NQ. NQ. Same with NQ, but with NQ, I still wanna see low prices. This has to be the drawn. I just don't. As long as it's below this high, I wanna see low prices. If the market takes out this high, then I'll start checking if we can reach to this level. But for now, as long as this high is still in place, this is the drawn liquidity. Okay, Nasdaq. Okay, with Nasdaq, okay, we have this wick. This is like a patch and revert. It looks like a patch and revert. Okay, here on Nasdaq, it shows that it didn't take out this low. So this is the rejection blow. Okay. So I will be monitoring this level. So on Nasdaq, it's an if then statement. Right now I'm bearish. Actually, let me change this high. Only if the market can attempt to get this high, I'll be bullish. I'm still bearish. Actually, I'm still bearish looking at this for Nasdaq. So I want to see the market hit through this. If it can go above this high, then I'm wrong. It's no more bearish. Then going on a 1 hour chart. So I'll take this one off of the gap. It no more has significance for me. The one that has significance for me right now is this one. This is the only level looking. I don't want to see the market trade above this level gap. I want to see it start rolling over. I want to see the market use this level gap and start rolling over and come back below this low. Okay. If it can trade above this level gap, then yeah, I'll see what the market wants me to do. But for now, this level gap is of most importance to me, and I don't want to see the market trade above this level gap. I want to see it continue going lower if it's going to be bearish to reach this strong liquidity. Okay, here I can see the market used this. Okay, this is Monday. Opened, slammed down. Then, okay. Okay. 6 o'clock Monday. This is the first candle of 6 o'clock in a 15-minute candle. The market goes down, boom, boom, boom. And when it reaches this price, and then it comes back up. So this was an obvious buying opportunity after the market had patched and took and traded below the liquidity. And what did it trade to? This market covered there. This is 9:30. This is 4:14. The market was closing all this inefficiency. So I want to see the market continue going lower and not take the high that is forming